Tonight we ask the big question we asked exactly a year ago on this same day on Upfront. Is Ghana's economy on the path to recovery? We assemble almost the same set of guests that delivered the verdict previously and ask them the same question. But first, let's start in Parliament, where the 2 billion CD budget of the Ministry of Finance was first rejected. Then after one whole hour, Parliament had a change of heart and the budget was approved. This interesting development will be perused. And joining me now to explain the phenomenon is the Minority Chief Whip Gavin Kwame Abuja. Honorable Abuja, you're welcome to Upfront.
Thank you. Good evening to your listeners.
Okay, well, I think I heard you, but you are very faint. Now,
good evening to you and your listeners. Yes,
let's start from the basis. Exactly why were you opposed to the Ministry of Finance's budget? This is perhaps the most important ministry in the Republic of Ghana. At the time that we are in a serious crisis, that we need them to be leading all of this conversation, not only with the IMF, with the Chinese, and also getting us back on the right track.
Well, thank you very much. And first of all, what we are very unhappy about with the Ministry of Finance's budget is not to impede their ability to manage the ministry. It's not our intention to say don't pay salaries. Our opposition to some of the items in their budget is what we are raising. First of all, you will notice that, one, as the minority leader said, contrary to the position taken by the House when we were approving the e-levy, that if you remember, if you recall, the Ministry of Finance put in an amount of money claiming that amount was going to be used by an entity to monitor the collection of the e-levy. We said GRA was capable of doing that. So in the resolution, we said clearly that that amount of money should not be used for that. It turns out that the Ministry of Finance actually went ahead to set up that entity, a private entity, and doled out that money to them, which is very, very annoying. Secondly, you also note that the ministry is trying to build a new headquarters. At a time that everybody is crying, ministries, roads, health, education are having their budgets cut because of inadequacy of our resources. The Ministry of Finance, led by Honorable Kenofuyata, if you notice, was one of those advocates claiming that it was prudent to build a new headquarters for the Bank of Ghana, claiming that the Bank of Ghana money is not government money, which you and I know is false, because Bank of Ghana is a state entity. They are only independent in their monetary policy determination and other things. But everything else they do. In fact, the money at Bank of Ghana is public funds. So it is very shocking that while roads cannot be completed, while schools, water projects, unemployment, the Ministry of Finance, after supporting the construction of a new headquarters, which is the fastest growing construction project, is actually attempting to build their own headquarters. It's as if they don't believe that there are crises in this country, and many other things in their budget. For instance, if you read that report, it's saying that Ghana would be benefiting from a so-called 500 million, $500,000 grant, or in terms of sustainable energy thing. At the same time, this same Ministry of Finance, as we have been told, has signed a dubious contract with SML to dole out about allegedly $100 million per year to an entity for doing nothing. And you ask yourself, you, the host, the listener, do you actually expect us to believe that the Ministry of Finance's budget is deserved? We don't believe portions that are attached to this and what they've done in 2023, we believe some of their budget should be reduced. So we took a decision to not support some of those things. So it was not a blanket opposition to Ministry of Finance's budget.
So how come there was an earlier vote and the majority lost the vote?
Well, I'm not sure of loss. What happened was the vote, you are very familiar with the procedure on the floor. When, in times like this, when we're taking a vote on the motion regarding the report from the committee, it is normally a simple vote. And in fact, since we started taking the motions on the report, we've never actually rejected any report because historically, they don't. What we pay attention to is the content of the build-up of the sums and what goes into the appropriation bill. That is the critical things we do. So the report from the committee itself, we just make sure that the figures tally and then the allocations match what they want to do. So on this particular occasion, because we took note of these, what we call indiscretions of the Ministry of Finance, our side decided not to support them. So when the voice vote was put, we made our point clear in terms of the voice vote. And Mr. Speaker, in the chair, decided not to call the result. So there was no defeat or winning of that particular vote. He put the vote first. He said he couldn't determine which people were, whether the yeas or nays were. It wasn't clear. So he decided to put it again. When he put it, it appeared to him that he still couldn't make the determination. So he said we go on a break. When we came back, Mr. Speaker, Honorable Bagdin himself came to the chair. Before then, it was the second deputy speaker, and put a voice vote again and called it for those who said they should approve it. So that's what it was. So there was nothing like it was approved, it was rejected and later approved. There's nothing like that.
So as we speak, the Ministry of Finance budget has been approved like all the other appropriations.
No, we haven't done any appropriation. We have approved the estimate from the Ministry of Finance. We are yet to do the aggregation of all of those into the appropriation bill, which is likely to be tomorrow. What we can do is to make sure that we will go back into those figures during the appropriation and see that we don't like this figure to be here. In fact, if you notice last week, we actually determined that, I think it's this week, Ministry of Education should reallocate a certain amount of money from
to special education.
Exactly, to areas where we have people with less privilege in our country. So we can make those recommendations for reallocation, provided it doesn't affect the quantum of the appropriation bill itself. It's basically reallocation.
Now, that's a very key point. Why then is the likes of Murtala Mohammed asking that it is the leadership of Parliament that should answer the question on what really happened in this instance? Why is he furious about the incident, feeling that something might have gone wrong?
I am not aware. I've not listened to my colleague. I'm not aware of what he's talking about. And as a matter of fact, we are just getting ready to do our carols night. I'm not sure he was in the house. If he said something might have gone wrong, I don't know what went wrong. Fortunately, parliamentary sittings are open to the public. If anybody said the majority lost the vote and then came back to win it, you will know that if you read the Hansard tomorrow or any other day, you will notice that nothing like that happened. The voice vote was put. Mr. Speaker said he couldn't determine whether those opposed to or those in support won. He called the vote again the second time and still could not make that determination. Based on that, he said, we are suspending for 1 hour. When we went for the suspension, Right Honorable Speaker Bagwin came to the chair and put the vote again and then called it for, those in support of it. At what point in time was the vote defeated and later won? I think it is important for all of us to be students of procedures in Parliament sometimes so that we don't unnecessarily create any doubt on the minds of people as to what happened. And the fortunate thing is that parliamentary proceedings are held in public. So it is not a secret meeting that anybody would have said that somebody lost and then later came to win. It is false if anybody said that the vote was determined that and those opposed won, and then later those opposed lost. Indeed, As the second time, the Mr. Speaker, the Honorable Isiama, the second Deputy Speaker, put the vote. Of course, my side was loudest. As far as we are concerned, our side was loudest. It was if Mr. Speaker had ruled against at that time, we would have triggered a move to get a head count. But interestingly, he did not actually rule on it. He rather went on break. So let it be on record. There was no time this evening where that vote was called for the noes and then later called for the yes.
Now, I need to transition, but I'm grateful to you for your time this evening for the clarification. Okay. We sure should be able to speak to you subsequently tomorrow, which is the day I understand the appropriations may be, because you are rising tomorrow, right?
Yes. God willing, we shall rise tomorrow.
Are you going to make it a fait accompli? Are you guys going to approve it?
Approve the appropriation bill?
Yes, please.
Oh, we have already signaled at different levels for certain amounts to be reallocated, and you saw with the case of the Minister of Education, you saw the minority leader make the case that we are looking forward to that 20 million cedis or so to be reallocated to a particular entity under the Ministry of Education for them to get our support for that and other reallocations that we talked about. So we have no we have nothing against the appropriation bill, provided what we have approved at various committees, agri, road, rail, education, provided the figures tally, we have no issues against that.
I'm grateful to you once again, Minority Chief Whip. Governor Kwame Agboja is the Minority Chief Whip, just explaining to us what happened in the Parliament of the Republic of Ghana, where it was reported that the vote on the 2 billion budget of the ministry, that's the estimates of the Ministry of Finance, had difficulties. And Parliament had to proceed on a break after the first voice vote for it to be redetermined when the Speaker himself took the seat. And another voice vote was done, and it was finally approved, and they had to move it on. The issues they had raised were what you were talking about, the headquarters and other things, including the SML, the controversial SML that the Fourth Estate's biggest story you have seen there. That 3 billion lie underpinning that particular contract is also part of the reasons the minority was unhappy with the Finance Ministry's budget, but it was finally approved. And as he explained there, we are going to have a smooth process when it comes to the approval of the main, what we call the appropriations bill tomorrow. Now, today, as I did introduce early on, the crux of our conversation is merely to put a question we put exactly a year ago today. Today is the 21st of December. Last year, on this same date, we asked the question, is Ghana's economy on the path to recovery? Now, some of the people who were on that conversation will be joining us to tell us whether their minds have changed on this matter in any way. After this break, we commence the conversation. You're welcome back to Upfront, and tonight we're asking that big question: is Ghana's economy on the path to recovery? And to help us put this in proper perspective, of course, others will be joining us later on, is that very distinguished economist at the Institute of Statistical, Social and Economic Research at the University of Ghana, Professor Peter Korte. Prof, you're welcome to Upfront.
Thank you, and good evening to you and to your discerning viewers.
Now, more recently, Prof, even international rating, not necessarily, international institutions like the BMI says Ghana's economy will reach gradual path to recovery in 2024. They are not the only grouping that's actually been telling us some good news now. Fitch also says Ghana's economy on the path to recovery, set to grow by 3.7% in 2024. That is the Fitch institution. EIU is also be making similar comments about the economy of the Republic of Ghana. Of course, locally, the finance minister and the President of the Republic all believe that we have turned the corner. But in this case, it is perhaps the only time we've gotten some of the other international bodies like these ones, BMI, Fitch, and EIU, all signaling in the same direction. But you understand the economy of this republic. Are they just telling a story to us, or there are real credible signs on the ground that we are on the path to recovery?
Well, I think we speak to data. We look at what data telling us, then we can say whether we are on the path to recovery or not. Are we returning to a normal state of health, mind, or strength? In other words, are we regaining control of something we lost, or something that was stolen? That's basically the meaning of recovery. Let's just oppose this to our economy. We lost grounds in terms of inflation. Inflation was about 50%. Exchange rate was quite rapidly depreciating, and our GDP growth actually at a point around COVID and went down or then started picking up. So all of this are signs that one can look at. Even interest rates started going up rapidly and all that. So you look at all of this and see whether you are on the path. In other words, are you still going down, or you are reversing some of the things you have lost? And yes, in terms of inflation, we've moved from the 50% and above to 26.4 as we speak. Exchange rate has been relatively stable compared to where it was. But I must say, the city dollar rate was around 4.5. Now it's hovering around 12. Growth rate has been around 3%. So yes, we are on the path to recovery, but I must say we still have a long way to move back to the state in which we were prior to this downward spiral.
So we put it in perspective, what's contributing this path to recovery? And I'll be coming back in this case, but I want to also hear from Joe Jackson. Joe Jackson is a business executive and a financial consultant. Mr. Jackson, is it truly the case that we've turned the corner and we are on the path to recovery?
Good evening to your viewers and listeners. I'm not sure I can say that we are fully on the path of recovery. The reason being that we actually hit rock bottom. So on one hand, we are moving away from the bottom. So you can say we are on the path. But on the other hand, there are so many risks that lie ahead of us that any complacency would result in disaster. For example, inflation has improved and it's trending in the right direction, but there's so many things that can go wrong. The forex rate has been relatively stable. But again, there are many risks. Look at cocoa. Are we able to buy the cocoa we need? Are we paying the farmers? What will happen? Are we going to get the support from IMF? Have we concluded? So that in as much as we are trending in the right direction, in as much that we have reached rock bottom and we are slowly getting up, the way I describe the state of our economy was that we were in a coma. We've been woken up out of our coma, but we're still in intensive care. We have not moved out of the intensive care unit yet. We're very much in intensive care. There's still so many risks. Look at our interest rates. They're very high. Look at how much we are spending on the domestic front to buy T-bills to finance the government. We could potentially creating another debt bomb just in T-bills alone. So the risks are high, We've moved out of the coma, but we are still in intensive care. And for that reason alone, I would say, yes, you can say we're on the path to recovery, but please, let's be very cautious. Let's be extremely cautious. We are still in intensive care.
I'm sure I'll come back to you to ask that big question. Is this a short-term, less likely to be continued path we are on, or we are signaling a forever change in direction? But let me also bring into this conversation Dr. Sharif Mahmood Khalid, who is an assistant professor of financial management at the University of Sheffield. And you're welcome, sir. I hope you are doing well, very well.
Thank you so much.
Now, I mean, that question I want you also to answer for me.
Yeah.
You've been hearing what Professor Peter Kote and Joe Jackson has been saying.
Sure.
Do you also think that at least we have signaled a turn in the right corner?
Well, for me, I think that I think you're using the finance minister's terminology, which is turning a corner. And I've been one of the few advocates who do stand by the point that he actually missed his own Wall Street balance. I don't think we're actually turning a corner. He possibly wanted to use cooling off. I think the economy was actually cooling off. It hasn't even cooled off. You've got to cool off before you can turn a corner. So for me, where I am is we were beginning to cool off. As to whether we've cooled off, that's still a question to be answered.
Now, unlike expectations that we're supposed to be getting, the third quarter GDP did not give us a very good signal.
Right.
And now, and that's to some signaled some fear.
Yeah.
But inflation has been doing very well. Let's not forget, we got to almost 54% not long ago, that's just last year, right?
Yeah.
And we seem to be getting to 20s and improving along the line. Professor Peter Kote, this question goes to you. Is this a short-term, less likely to be repeated trajectory we are on, or this term is for the long road to recovery, which is likely to happen soon?
Well, if you look at our history, anytime we are under an IMF program, we tend to do well in terms of managing our fiscals, in terms of managing inflation, etc. So on that basis, I can say that all things being equal, we are likely to gradually improve on the indicators we are seeing. Granted that we don't repeat the political business cycle in 2024. Oftentimes, we are able to do very well on the IMF, but when it comes to election years, we throw away IMF programs, advice, policies, and do our own thing. We create a mess, and then in the first half of the following year, that is when we see the real turbulence. So from now to maybe third quarter of 2024, we are likely to see gradual improvements in what we are seeing. I don't foresee any likely reversal in my view. But let's also look at I think you made a point about the GDP figure.
Yes.
The 2.0% growth rate.
Yeah.
Yet it was contrary to my expectation. However, if you look at 2022, quarter 2, quarter 3 figures, you will notice that in quarter 2, we grew better than in quarter 3. But the last quarter of the year is where we see significant growth, and then on average, we are able to perform. So I can cautiously be optimistic that in Q4, we might grow beyond the 2.0% and record some rate of 2.8 or 3% or above by end 2023. However, I would be very interested in knowing why construction construction I can understand, but we are not paying contractors. We are not investing, and most of the projects have been abandoned. Mm-hmm. But when you come to mining and quarrying, I'm quite concerned about how or why gold production reduced significantly between quarter 2 and I don't understand. I don't know any major
I'm afraid I seem to be losing you. We should be able to fix that. Well, it's still a very bad line there. Professor Peter Kortei joining us via Zoom. I will bring in Joe Jackson at this point. And Mr. Jackson, we've been here before. So I think I have a good line with, but I'll come to you again, Professor Peter Kortei. I understand that you are working, the line is working well to you. I'll come back to you. Mr. Jackson, the same question I was asking Professor Peter Kortei, whether this is a 9-day wonder and it's less likely to be sustained going into the new year. Are you convinced that the small change we are seeing now is going to be sustained and we are truly going to stay on the path to recovery?
I think it will be sustained. I have no doubt that it will be sustained. The challenge is that as we come closer and closer to the election, the third and fourth quarters of 2024, then we have that risk. The risk that's always been there, that the election, in order to support the election, we may start to open the taps and allow the largesse to flow. But truly, we don't have a choice. Part of what is happening now is the only way to go. I have absolutely no doubt that it will continue. What we have to make sure is that we don't get tempted by the election year, as I say, turn on the taps and then let the largesse flow. Otherwise, we have to continue along this path. We don't have a choice. Literally, the country is broke.
That's an interesting point. I needed to bring this in because let me bring in, Prof. The understanding we are having in this conversation, let's not get it wrong. We're expecting a certain $600 million from the IMF before this year ends.
Right.
It appears the meeting is only going to happen next year because China is refusing, in the words of Minister of State, to play ball.
Yeah. Well, the point is
that a risk factor to we be on that sustainable path that we're talking about?
I'm going to come to that. That ought to be counted by any serious investor or serious watcher of the market as a significant risk, not just a risk.
Okay.
Now you look at all of this, you're talking about a road to recovery and the likes of that. When you put everything in context, right, we've normalized economic chaos. We have not, or we are not on the path to recovery. Because you look at that, you could use inflation, which is one ingredient of all the ingredients in the basket. I want us to be practical in the economic sense of whatever it is. You look at even exchange rates and what have you, and the trading on the forex markets. This has been normal figures of the last 1 year. They haven't changed significantly. So let's say we're waiting for the second tranche of the IMF, and normality and practicality of the market within local emerging markets, or the markets such as this where we have a massive presence of an IMF program, is that they monitor when the money comes in, just as we do with cocoa syndicated loans and the likes of that. Right? We've just missed a tranche. So that poultry farmer who was waiting for the dollar to drop to expand the poultry farm is not going to do it. Right? That businessman who was waiting for the dollar or the cedi to perform based on the tranche that was coming in, right, to allow them to expand their businesses, has missed that period. Now we've confused, or we've succeeded in confusing the market such that they don't even know when this is going to come in. And the government, if they were serious about engaging the international community, has missed two opportunities to have injected confidence into the economy, which is what? In October, we just had a recent IMF annual meeting in Marrakesh. Yeah. On the sidelines of these meetings are serious discussions such as this, which should have happened. Or they come back to say, okay, well, we had XY engagements with the IMF or the World Bank or with the Paris Club or whoever, our external debt, or with China. Right, that never happened. So that confidence, we missed another opportunity. We're just returning from COP28 in Dubai. Then you have all players there. What happened? Right? They've not returned from Dubai again to say on the fringes of COP28, so they've not even put any serious efforts to say that this is what is happening. If they are doing, they ought to communicate it because it's part of the confidence you have to put in the economy.
But you heard the World Bank president who is leaving the country.
Yeah.
He believes that Ghana has done everything on its part to make sure that we secure this 600 million. That the biggest problem is perhaps the people who are supposed to help us out, meet us halfway, like China.
And I'm coming into that. So you look at China. China is an outlier when it comes to the Paris Club, even though they have to, they are within the agreement or the framework. Right? China is very conventional and commercial when it comes to debt forgiveness and debt programs or restructuring. They hardly ever do it. So what is going to happen is that we are not practically sure as to how we'll engage China in this light. What is the program or the policy that government has to engage with China? There has to be a framework. And that framework is what can inject confidence into the economy. We're just not waiting for wonders to happen. So these steps are all part of economic recovery. But if we're not seeing them, how do we say recovery? And mind you, we are speeding into an election year, and that comes with its own problems, right? Where they're going to cut a lot of swords for political reasons, for non-funded projects, inject money into them, then they stay and don't progress after 6 months or first, second quarter. That also has its economic ravages when it comes to. So these are the practical implications of what we ought to be looking at.
So from what you're saying,
and what again? Because an economy cannot recover, right, under a finance minister who, by any metrics of a management leadership position, is failed, right? Who, by metrics of any political prudence, is failed. How do you recover on that? That is a serious question that needs to be answered.
You do not even think we are on that path in the first place.
Where is the path?
You do not
based on these indicators. I'm saying that we've normalized economic chaos. But you see, if you have, Ray, you're earning a certain salary, I'm just maybe be practical with you, right? Then you say, okay, well, it changes by a significant not, right? You got a slight increase. Then you get normalized after a period of 1-2 years that, okay, this is how much I'm going to earn, but I won't get a pay rise. It becomes normal for you. That's what is happening to the economy in terms of all these exchange rates and what has happened, because we had a big boom, right? Prices went up to a certain level. They stayed there for a very long time. Prices are not coming down, right? On the market today, I still traded with the pound. It was at 15 almost.
Okay.
Right, in actual sense. So when we're even talking about these figures, we shouldn't be reading to the public the figures published by the central bank. What is happening on the actual market in terms of trading, buying dollars, buying euros, buying yuan, and the likes of that? These are the practicalities of the economy. If we look at inflation in isolation, we might be, smiling at the wrong side.
I need to bring in Professor Peter Korte on this question I asked. Whether the difficulty we have in securing the 600 million from the IMF is going to be a risk factor in we staying on this path you say we are already on, Prof. Forgive me, I didn't hear you first. Yes. No, you're perfect now.
Certainly, there is some risk element. Can you hear me?
Yes, it's good. Please proceed.
Can you hear me?
Yes, you're fantastic.
Yeah, certainly there is some element of risk there, because we need this money to cushion us in terms of showing out our reserves, our exchange rate stability, etc. So if that is not coming or delayed, there is some risk over there. But moreover, there are a lot of things that are tied to this agreement, getting the external creditors to agree to a framework. There is indeed a lot of things that are tied to it. For instance, our external debt payments has been suspended. So there is some accumulation there that we are not meeting, debt service obligations that we have to meet, etc. So the longer we wait, the more difficult it becomes, the less confidence investors have in our economy. And therefore, we certainly need this in order to continue to stay on the path to recovery. But I must say, I don't totally agree with the gentleman that nothing is being done. It's not everything that you engage on the sideline that you come out to the public to say. I believe that some of these sideline discussions are ongoing, but it's also important to say that some, of course, has to be communicated, but it's not everything that you have to put out in the public domain. I believe some discussions are ongoing, and certainly we need to get China to agree to some of these terms so we can move on. I know for sure that the World Bank and IMF and all of that are engaging China based on the framework that has been prepared. So let's not have the feeling that nothing is happening. I think there's a lot going on. But I must say that it brings certainly a lot of risk. There are a lot of risk factors if these monies are not released on time. But the IMF brings confidence to the economy. And if there's a stalemate, in reaching agreement. There's a stalemate in disbursing funds. That puts some investors at bay. I know some bilaterals are also waiting for some of these things to kick in so that they can engage to give Ghana some concessional financing.
When I spoke to the Minister Minister of State responsible for the Finance Ministry, he was confident that the 600 million will bring in an additional about 500 million from the World Bank and other groups who are only waiting for the cue from the IMF to proceed with that. Now, you talked about how Q4 mostly makes the change and the evidence from the year 2022. If, as we see it, is less likely to happen in Q4, are we going to really have an impact on our expectations of GDP growth and the other things that we are so looking forward to show proof that there is indeed a turnaround? Yes, Prof.
Well, Raymond, for Q4, we're almost at the end of Q4. So
yes.
What is going to happen? Yeah, it's happened already. I think December, we are already in December. It is the next Q1 of 2024, which will be a challenge if these funds are not released. When there's this uncertainty on the market, that's where the government is cash-strapped in terms of forex and in terms of injections that is going to continue to borrow more from the domestic market. Already, as Joe Jackson mentioned, how much we are paying on commercial paper and on the money market is quite high already. And if government continues to borrow because these inflows are not coming in, that will have severe repercussions on the interest rate, have severe repercussions on businesses, and could trigger higher rates of inflation. So it is very critical that we get this money flowing. And I believe government is engaging on the sideline. Hopefully, we might come to some consensus. As to when, I cannot tell.
Now, I need to bring this to you, Mr. Jackson, because we are already in the election year. This is a very serious election, and the stakes are very high in this election. You mentioned that as a major risk factor to we staying on the path that will lead us out of our current difficulties. Do we have what it takes? You say that we don't have the option, but do we have what it takes to stay disciplined, stay on the right path, and make sure that the election does not distract us from getting back to winning ways?
Yeah, the interesting thing is you are asking, do we have the will to execute what we have to do?
Yeah.
That's a tough one. But I tell you what, I have to believe that we will execute. Otherwise, the alternative is dire. The alternative means a 2025 where things will go really bad. I have to believe that having stared the disaster in the face, we are willing to go along and do the right thing, even under the pressures of an election. I'm not saying that we will be totally successful, but I believe that we'll be a lot more restrained than we have been in previous years.
Okay, now I need to move, gentlemen, into a bit of a projection into the new year. Yeah. 2024, what should Ghanaians expect? Should they expect a better year than 2023? Should they expect better fiscals? Should they expect improved economic conditions from what you know and your reading of the current situation?
Well, I'm going to do it contextually, and I'm going to do it contextually from the budget statement. So, I see the budget as more of a tick box exercise that was responding to the IMF program. If that happens, then much will not happen in terms of growth. But again, we're still going to get some gains because, IMF comes with a lot of financial discipline. And if we're going to heed to that because we have a contractual agreement, right, with the IMF. And what it means is that the IMF discipline may bring in some positives into the economy, definitely. But again, it may also have its own repercussions in terms of affecting some, indigenous growth. So it's about weighing and how we would navigate between managing an IMF program and also growing our indigenous economy. And that would begin to reveal itself in the first quarter, because we don't have the numbers now to speak to it. But looking around or looking back to the last budget that has been read, I see it more of a tick-box exercise than a response to an IMF program, right? And the positivity of the IMF program, of course, we have to enjoy that. But how do we manage, or how do we indigenize our own economy in terms of growth, and then put it on the real path of growth that we're talking about, right? So maybe in that instance, we would have cooled off and probably turned in a corner, or having that recovery that we're talking about.
If you are advising an investor hoping to invest in the Ghanaian economy in the new year, would you think this is the best place to do business coming in?
Not for now, because a lot has happened in time past, right? And these indicators which the financial or the international financial market has an eye on, you look at the cocoa syndicated loan, right? It didn't go as planned. And in a very long time, that has never happened before. That in and of itself is reflective of the kind of investor confidence that we have, because this was always a done deal with no sweat. Nobody cracked a sweat to get it done. But this time around, we struggle with it. The market would watch this, right? We're struggling to complete an IMF program or to get a second tranche of a program that has been completed. That is a big indicator for the international community to watch as well. But locally, again, because as I said, the local market has been disrupted in the sense that they cannot gauge, right, this tranche again. So those gauging it and anticipating to do business or expansion or grow their business for when the city would perform have been disrupted. As to how government would rather inject that confidence and stabilize that, it's going to be a big problem. Mind you, also, a lot has happened in time past, combining all of these, as it may, as I've indicated before, looking at the sort of financial confidence that have been lost by locals. Government needs to actually step up in educating and putting real confidence in the people to invest back into the economy and to be engaged with the formal economy.
Now, I'm asking you these questions because, and I need to bring the other gentleman into it. First, not even about projection. Yes, if you as a Professor Peter Korte, consulting for a group of investors, they come to you that we have money, we want to put it into countries that would actually yield the needed results. Is Ghana one of those countries you say 2024 will be a good year? So go invest in there, you will get better returns. Prof.
I would, yes, I would in the sense that...
Not just because you are Ghanaian.
Not just because I'm a Ghanaian.
Yes.
I would because if an investor wants to invest, one of the things they look out for is political stability. And that we have that over 20 years or more. Our democracy is maturing, and that is one of the key things investors look out for. Political unrest, civil unrest, coup d'etat, we don't have it. Ghana is a peaceful and safe country compared to others in the sub-region. So that will be one of the agenda which every investor would. And I must say that we do get approached by many of these multinationals to advise. So I'm not just speaking from a vacuum. Our performance hinges on the inflow, the IMF program. If we're able to get the inflow and we're able to get the external creditors to agree to a debt restructuring program, that certainly will kick the way for many things to happen. And we are likely to see better growth rates because in election years, there's a lot of economic activity, and that spurs growth. And therefore, 2024, we're likely to see higher growth rates than we've seen in 2023. But as I said, it is contingent on us unlocking this impasse between China and the external creditors. Our fiscal position is likely to improve, given that we are an IMF program, up to the third quarter. But for the fourth quarter, I cannot stick my neck out because we have this political business cycle where it's very difficult for us to break, and therefore I cannot put my head on the silver platter for this to say yes, our fiscals will be good by end 2024. But at least up to the third quarter, we are likely to have very much improvement in our fiscal. So the investors, as you see, are also very cautious. They are watching the market, they are watching the space. They know that we need to get into this agreement. In fact, that is why the cocoa syndicated loan has been a difficulty, because we haven't agreed. They are not sure how much haircut is going to happen, how much we are going to agree with the external creditors. So there is uncertainty. But if we're able to break that deadlock and sign an agreement with external creditors, and it's clear, I can assure you, if we were to go for cocoa syndicated loan, it won't be as difficult as we witnessed in our current situation. So to conclude, 2024 looks like a better year, except to say that we haven't managed to break our political business cycle. So I don't know whether this time around, given all what we suffered under the debt exchange and all the challenges we've been through, we'll learn our bitter lessons and we'll not go back to what we used to do in election years.
Now, I have a question though, because you mentioned basically all the indicators. Government is hopeful of an inflation of 15%. Are we likely to really get to that? Because we seem to be doing well, 26 or so, or in the 20s as we speak. Are we going to end 2024 with an inflation of 15 or less?
That will be an uphill task. I don't think we'll be able to meet that. But perhaps we might miss it by 2 percentage points or a little more. But I do not think, given that it's an election year and the last quarter, we are likely to engage in our spending, because the elections will be keenly contested, and usually the incumbent will not sit down and allow the opposition to win easily. So there's going to be a close contest, and we are likely to spend. So, and that also propels inflation. So I cannot agree that we'll hit 15%. We might be able to hit 18 to 20%.
Now, Mr. Jackson, when the ordinary Ghanaian asks you this question, whether they should expect a better year 2024, where they will not have as much difficulty as they had in 2023, are you in the position to give them hope?
Listen, what I would say is that it's going to take some time, and quite some time, for what will be achieved to trickle down to the common man. So my advice is tighten your belt. Things are not going to be easy, but there's hope after 2024.
I am grateful to you, gentlemen, Professor Peter Korte of ISE and Joe Jackson. I'm wrapping up in studio with you. Yeah. Are you equally optimistic or somewhat optimistic or cautiously optimistic about the year 2024?
I'm very cautious.
Okay.
Right. But I will not qualify my cautiousness with any of the adjectives you're bringing into the equation. Yeah, but that's what I've said. I told you what I'm looking at in terms of that. But you see, the point is, we've emerged from an era, right? COVID masked a lot of our economic woes because there was cheap money, right? The era of cheap money is over, right? So the West is struggling. You could see what's happening in Germany and the likes of that. So investments or throwing cheap money around emerging markets is something that has come to stay for a while, and people just don't throw cheap money anywhere, right? People often or erroneously think that, okay, when a local currency is not performing very well, you bring in, a stronger one. But the economic, impact to that, right? So you're not going to have a lot more coming, or less, of course. So even if you look at within the space, locally, you speak to contractors who are a significant part, where construction contributes. They'll tell you these days we don't want GOG projects. And by GOG projects, we don't want government of Ghana funded projects. They want donor funded projects. Yeah. So they're looking for African Development Bank projects. They're looking for IMF, World Bank sponsored projects, because those are the projects they're going to be paying. And how many of those projects do we have lined up across the length and breadth of the country or up and down the country? So this is where we seem to have a problem. We have a backlog, right, of contractors at the road fund. We're not talking about all of these things. This is like massive debt, right? You pay a contractor, you pay a mason, you pay a carpenter, you pay a host of other artisans. That is not happening. So what is the government's plan to say that we're going to offset this kind of local debt that we are holding at the road fund, at the GET fund, and other state statutory institutions that are holding businesses? Because once you pay them, they spend back on the economy.
And there is some money circulating.
Significant, and there's some money circulating in the economy. So whether you have an IMF program or not, you're still going to have these problems if you don't release that monies into the hands of these business people. And mind you, time value of money, right? If a contract certificate lasts 5 years or 6 years without being paid, what's its value? Some contractors have contracted loans to do all of these things. So if we're not looking at, or the government has not really put out a plan to say this is going to happen, then we're going to have a problem, right?
Ladies and gentlemen, the verdict there for you. Many thanks to you. And I'm interested in hearing yours too. But many thanks to you for joining us on Upfront today. I had on the show Professor Peter Korte, Dr. Sharif Mahmood Khalid, who's an assistant professor of financial management at the University of Sheffield, and also Joe Jackson, who is a business executive and a financial consultant. Thank you once again for joining us on today's edition of Upfront. And many thanks to you, sir, for also joining me in studio. The news is up next with Samuel Kojo Brace.